Well, good evening. Tonight we're live from London, Portugal, and Toronto. Welcome back to Stockbox Premiere. Well, joining us tonight on the panel for this gold and silver special, Ryan Mee. First up, of course, the CEO of Fulcrum Metals. That's the ticker FMET on the LSE, where we're talking gold tailings in Ontario. Next up is Peter Clousey, VP of Capital Markets at Silver Bullet Mines. That's the ticker SBMI, of course, over on the Toronto Stock Exchange. We're talking about their silver mining and processing operations in the USA. And finally, Nick Tulloch, the CEO of ECR Minerals, again, London listed with the ticker ECR, about their Blue Mountain and their Lulworth gold projects, looking to fairly soon get into gold production. Well, the format, as always, is to begin with a 10 to 15-minute interview, followed by, of course, the open Q&A session for about 15 minutes. And this is your chance to put your questions to the director speaking using the live chat on YouTube, or we'll keep an eye on the Telegram groups, etc., for some of the questions coming in. Do remember, if you can, if you're enjoying what you're watching tonight, to like, subscribe, hit the retweet button, or hashtag Stopbox over on X, as it's now called. And we'll do our best to get through all of your questions. But of course, the directors are bound by market rules, so they will do the best that they can. Well, to kick us off tonight, we'll welcome our first guest, Ryan Mee, the CEO of Fulcrum Metals. Good evening, Ryan. How are you doing? I actually can't hear you, Ryan. You may have muted yourself.
Technology, eh?
There we go.
Good evening, Mark. It's always a pleasure being in the studio with you, and then thanks to everyone for tuning in.
Yeah, good to be catching up, and of course it's timely. You know, you're into gold. You're not quite yet producing, but that's the aim of the game for Fulcrum. Turning waste into gold, I think, is the slogan, isn't it? And of course, gold doing very well. So you take quite a different approach to many junior resources firms in that you focus pretty much all of your efforts now on unlocking the potential from the historic tailings in the Kirkland Lake area, and that's of course with your projects Tech Hughes and Silvernite. So first of all, could you perhaps just introduce these two projects and why you see the tailings opportunity having such economic potential for you?
Yeah, sure. So Tech Hughes and Silvernite, they're located along the Kirkland main break. It's actually where there were 7 mines. It mined the same ore body, produced over 24 million ounces of gold. So, that started back in the 1920s to the late 1960s. So you can as you can imagine, there's quite a lot of mine waste in and around those areas. And these two tailings bodies are essentially from 2 of those mines. Tech estimated to have around 6 million tons, growing about 0.66 grams a ton, and Silvernite just over 4 million tons at I think it's 0.47 grams a ton. Now, what we have to remember is that in the current climate, all these new mines that we're seeing in Canada are around 1 gram or less. So and that's if we look at the gold price now, that obviously means these lower grades are a lot more economical. The reason why we're excited about tailings is that tailings is already mined. It's already been discovered. It's been shafts have been developed, and it's been blasted and brought to surface. So this is already mined, the fine tailings. It's sat at surface. We know exactly where it is. And what we're actually doing at the moment is proving a concept with a new leaching technology, which so far we've proved that we can double the grade of gold that's recovered from the tailings in a much quicker time. So we're getting more gold out through the process, and we can do it quicker, which obviously has direct consequences of costs. So we're looking to develop a concept here of a low-cost production opportunity, which is a near-term opportunity. we don't need to discover these tailings. We need to extract them, and that's what our work is focused on at the moment.
And why has no one else tried to reprocess these tailings here then, if it's so easy as you make it out to be?
Well, firstly, without the right technology, these tailings are not commercial. So people have looked at these tailings before. They've used cyanide-based methods. They were only able to recover 30% of the gold in it over leach times of 48 hours. What we've proved with the technology that we're using is that, we, even on an unoptimized basis, that we can recover up to 60% of the gold in as little as 3 hours. So we really are hitting the right notes to develop an economically viable concept here, and that's exactly what, as I say, that's what we're doing at Tech, to actually not just prove the technology works, but deliver a concept. And we've got multiple work streams ongoing at the moment to deliver that.
Well, this was what you just said really backed up, I think, in your December press release there, where I think you released an update saying that you've got the increase in gold recoveries up to 63% at Silvernight, as well as the significant reduction in the leach times here then. So, I mean, it all sort of hinges, you say it's not economical unless you've got the technology. So, I mean, how do you prove that technology works?
Well, in short, we have, Mark. As I say, cyanide-based leaching methods, 30% recovery. The reason for that is it's refractory. The technology that we're using, which is our partner Extract, based up in Kentucky in the US, we've shown that even on, and when I say unoptimized, this leaching technology, if I just go back a little bit, these tailings have been sat there for 60 years. There's very little metallurgical work that has been undertaken on these properties. So really, from a cold start, we've came in with the technology, and from the first pass, really, we've got nearly 60% gold recoveries. You mentioned the news release that we put out in December for Silvernight. That was a 63% increase in the gold recoveries. But if we look at the work that we've done on Tech, we've shown that we're going from 30% recovery up to nearly 60%. So that's nearly double. And there is, we've got a robust program there to optimize this technology. It's a 4-phase program. The first one is the high level unoptimized leach testing, which we have done. As I say, really, we're focusing on tech to build and deliver the concept. So we completed phase 1, which is right. We've got 60% gold recoveries in as little as three hours time. So that's nearly double the recovery of gold and over 90% reduction in the leach times. The phase 2, which we're doing at the moment, is the initial conceptual study. That's going to give us a lot of information with regards to the operating costs and the capex costs to the project. And that will then lead on to a detailed optimization study, which we should be doing over the summer months. And that's where we really optimize that by adjusting the parameters of the leaching reagents. And also have a look at, can we further maximize or minimize, should I say, the leaching times? So we're kind of coming in from both angles, and that is, can we get more gold out of this, but also can we do it quicker and therefore cheaper?
And how is that phase 2 progressing then? Because you've completed phase 1 all as in time and all went well. Where are you at in phase 2?
Yeah, so we put out in one of our most recent RNSs that we should have this phase 2 completed by the end of H1. But we are making excellent progress, so we hope to have that out much earlier than that. But obviously, I need to stick to our publicly available timelines. But we're advancing as quick as we can, and we try to deliver ahead of expectations on that mark.
Okay, and I mean, just thinking of the risk here, could it be a go or simply a no go? If it is there a risk that these results come back from phase 2 or even phase 3, and it's like, actually, no, we can't do this as we thought.
Well, look, we've got all the odds stacked in our favour. We're not mining, we're extracting. So we're cutting out half, if not 2/3 of the cost of producing gold from the tailings as opposed to a mine. We've got a gold environment, which, since we focused on tailings, has pushed up from just under $2,000 an ounce to $2,900 an ounce. And so we're pretty happy with that going into this, that we're going to have a low cost operation, and if the gold price keeps going up, it's going to be very lucrative for us.
Indeed, and all of that element then is with the partner here. That's sort of out of your hands. I know you're doing other work in the meantime, which I'll talk about in a moment. But is it really over to Extract, and presumably you're in sort of regular contact, but really it's in their court at the minute?
Well, Extract are our technology partner. Extract also have a partnership with Bechtel Engineering. So as part of this phase 2, the collective partners that we have are working on this phase 2, and importantly, we're going to be using live prices for equipment. So it's not going to be prices of equipment from 2 years ago, which will be out of date. But of course, we need to make sure, the whole point of us having these partnerships with such well-established companies, Extract, it's a company born out of the Reynolds family, which is one of the most wealthy families in the US, and Bechtel Engineering, which are one of the major and successful engineering companies in the world. And if Bechtel say this technology work, then I think people should stand up and take notes. Obviously, these are private companies, so I'm limited what I can say in the public market, other than the news releases that we do put out. But investors and participants in the market that are looking at what we're doing, saying, "Oh, I'd like to know a bit more about the technology." Obviously, that will come in due course with the phase 2 study. But you need to have a look at the partners that we're aligned with here, and realize that actually, what? If companies of these magnitude are telling us it works, then maybe it just does.
And not just the partners as well, but I think you've also got quite a lot of interest from the Ontario government, have you? Mines Department. I know when we met in Resourcing Tomorrow, we did an interview with George Pirrie there. I know you know him fairly well, don't you? You've got quite a lot of interest from that side as well.
Yeah, well, from the very start, when we started looking at these tailings, which I think was November 23, maybe. We started that engagement with the local and regional mines departments, with indigenous communities. So we've been bringing everybody, all these stakeholders along with us on this journey. As you pointed out earlier, we're making an early move in reprocessing tailings, which it actually has quite significant benefits other than the production of gold. These tailing sites, they've been sat there for 60 years. They obviously have gold and associated elements which has polluted those areas, and we get the opportunity. We're delivering a concept here whereby we can go out there, extract the gold, clean these areas up, and we can help that process of bringing these lands back to the community. We're actually addressing two key UN sustainability goals here. In the first instance, decarbonisation of all supply streams. Just by the very nature that we're reprocessing rather than mining, we've got a very low carbon footprint because we're not mining. And secondly, as I just said, that we're looking to help reclaim these lands. it's increasing biodiversity. So
Okay.
we're addressing some really important issues. In addition to our investors and stakeholders, within the business who are more focused on the gold.
Okay. And in terms of what's to come then, in terms of milestones that investors can look out for, so you've said sort of H2, just at the start of H2 for that phase 2 to be completed and announced to market. But I know in the interim you're actually you're looking to get up a technical report, I think, at TechUs, and also a resource statement, which is why you've been going out there in the snow and sort of taking auger samples. So is that what you want to do in the interim, sort of between now and H2, get it out in Q2, maybe a bit of a resource statement? What else is going on?
Yeah, so I think there's three important things which we're working on at the moment, which is obviously in the most recent RNS operational update. The first one is, actually there's four. One is the work that we're conducting towards the 43101. That's going to include, the first compliant maiden resource. That's why we was out in Kirkland Lake in January in the -20 or so temperatures, which was delightful. And we should start getting some assay results through from that soon enough. The second one is the phase 2 conceptual study. It's a very important study to the company. And I say we're making excellent progress on that. And the work from the phase 2 feeds into what we are working on with Extract, and that is a master licensing agreement, which will cover all of the Timmins townships and also the Kirkland Lake across Larder Lake up to the Quebec border. So that will give us a very concentrated area for us to work on. There's so many tailings in those areas. We could be working there for a hell of a long time. And it gives us, that early adoption. It gives us a bit of security in the work that we're doing now. So, we're going to see a return on the efforts over the last 12 to 18 months. Again, I'm really excited about, delivering these 3 or 4 really important items of news for shareholders.
Good. Well, thank you, Ryan. So we are coming on to the time to go over some questions from our audience, your investors, potential investors, hopefully. So I see one that came in quite early on here. So good evening, Ryan. When do you think we will be in production with gold closing in on $3,000? It looks like a gift.
Well, essentially what we're targeting is to have the concept completely built out by the end of this year, so we're construction ready. What we're doing alongside this work is, there's some important environmental work that needs to be done also. So really it all depends on how long the environmental work takes. That might be 12 months or 15 months. What our ambition is that by the end of 2027, we're at nameplate capacity in terms of production, for the TechUs project. And we're looking at a variety of tons per day as part of our phase 2, 1,000, 1,500, 2,000 tons. So I think people can work out the gold price, the tons, and the gold grades that I stated earlier to recognise that this is an operation which can deliver some significant revenue to the company, which 18, 24 months. So I think that's it puts us in a great stand.
Yeah, okay. I know you're probably being a little bit careful what you say. That it's always very difficult to set expectations, but I think you did, in 2027. I won't hold you to any of these deadlines. I know your investors will, but hopefully you've been pessimistic rather than optimistic. But it's good to get an idea. Anyway, Ryan, it's good to get an idea. So another question that's come in here, it looks like, is Fulcrum looking to add any other gold tailings opportunities in Ontario to its portfolio?
Well, look, what our ambition is to be able to bring, a new project online every 12 months once we've got tech up and running. We have had other companies come to us asking whether we want to have a look at their tailings. Obviously, currently we're just concentrating delivering this concept at Tech, and obviously, as I say, we're also focused on getting executing this master license agreement with Extract over to the biggest gold camps in Canada, in Timmins and Kirkland Lake. So naturally, that's going to give us a very keen commercial advantage in how we go about, not just sourcing but executing, new opportunities for gold tailing. So we're always looking. We're looking for the right deal, and it just needs to fit within the parameters of what we're doing.
Yeah, okay. I like that. Like what you said. So that, in theory, if it all works at Tech Hughes, you will look to effectively keep rolling and rolling and rolling and processing different tailings projects throughout Ontario.
Absolutely, that is the plan. A bit of organic growth in there, and as I say, we're an early adopter of the technology. We're an early mover in the space for tailings reprocessing, and people are starting to recognise the opportunity. You've seen the deal with Discovery Silver in Timmins just the other week, $400 million deal. They're focusing on reprocessing the tailings as
Okay.
their first move as part of that. And as I say, we've had a lot of interest from different parties in terms of participation in other tailings projects or other kind of collaboration opportunities.
Okay, good. Another question I can see popped up. Do you expect to see rising gold prices increase buying of shares in extraction-focused natural resources companies like Fulcrum?
I think it's more than just the price of gold. Obviously, the price of gold helps because let's face it, reprocessing tailings is a lot quicker to revenue generation than developing a new mine. But it's not only just cheaper, but it's quicker to do that. But there's a huge potential in tailings. There's been estimated over $10 billion worth of precious metals in Canadian mine waste alone. And what you've seen in Ontario, from the 1st of July this year, there's going to be a new fast track process for recovering minerals from historic mine waste sites like we have. Because the government recognizes not just the opportunity from the mineral wealth side of things, but also what this can do for local communities and local environments. As I say, touching on increased biodiversity through reprocessing and reclamation. So I actually think that it's not just about the gold; it's actually about what the concept delivers, and that is a better environment for all of those stakeholders, whether it be government or local communities.
Good. Well, that's good to hear, Ryan. So I can see some more questions. We have to get through them. We're running out of time. The main focus is tailings to draw in revenue, but are you advancing the Tully Gold and Big Bear projects this year, considering they are both drill-ready projects?
No, great question. I really like these two projects. We simply focused on tailings because of that nearer term revenue generation. Look, we're looking, we're reviewing opportunities to, bring, other partners to the table on that so that we can get the drill rigs out there and, get some exploration going on these properties. You know, Big Bear sat there waiting for a discovery. We've drilled the drill targets. Tully, it's in Timmins. Timmins has produced, over 80 million ounces of gold. It's within 30 kilometers of some of the biggest gold mines in Canada, like Dome, Harlinger. These are 15, 20 million ounce gold deposits. So, there's a huge opportunity there at Tully for resource expansion and developing a mine there. So, really excited about that too.
Okay, and can you just keep those projects sort of in the portfolio? Do you have to spend some money to keep the license active?
You do, yes. I mean, the majority, Tully, is very, very minimal holding costs. It's like $1,000 a year.
Okay.
That's because most of it's held by license. Big Bear, there's a higher spend on that, but we've got some accumulated work expenditures on that, which will keep it in good standing for a good while. But we don't want to see these projects standing still, so we're having a look, at different
Okay.
possibilities for these properties to bring some value, which I don't think is. I think if you look at the tailings and the projects we got, it's just not built into our share price.
Okay. Good. Okay, I know we have some other questions here, so let's see if we can get that up. Can you provide an update on the gold and uranium exploration assets? So we've talked a little bit about the other projects there. So maybe the uranium, because that was quite a big one, wasn't it? But you've sort of shifted it on, but you still hold, you still stand to benefit from it.
Yeah, so the uranium, projects in Saskatchewan, they're a really, really good portfolio actually of uranium assets. Some high grade uranium that we found there. We were fortunate enough to option those properties out to Terra Balcanica, listed over in Canada, last July. Now, over the option term, that'll see about 3.3 million Canadian in cash and shares. So that's realising some exceptional value for shareholders. Fulcrum retain a 1% NSR, over that portfolio too. So I'm obviously always in dialogue with Terra to see what they're up to. I think they're a great company, a great partner for us, and I think they're about to go out and drill some silver and antimony targets, and once they're done there, they'll be getting out in the field to move these uranium projects along. So we should see some news flow on that shortly.
Good.
And obviously, we just touched on, the gold projects or gold exploration projects in Ontario. So
Yeah, exactly. No, good. Two come up very well. I think you can't be any. Maybe you want to add copper to the portfolio. That's the the only other one that's doing well. But
well,
uranium and gold.
interesting facts. We focused on the gold at Big Bear, but we're very well aware that holds, base metal prospectivity. We know there's zinc up to 19%. There's been copper on there reported 4.5%. So it's Big Bear's offers many different upsides for exploration on that property, and
Okay.
gold, being the main focus at the moment, but. So maybe we do have a bit of copper in there.
Maybe. Well, we've got just a couple of minutes left, so let's. We were talking about this before we came on air. The gold price targets before year end. And yeah, you have a bit of a theory, don't you? Actually, yeah, it was quite interesting. You talk about the sort of cycle it'll go through. Maybe you want to share it here.
Yeah, I think I think you're going to see a number of cycles, but ultimately it's going to remain in an uptrend. I think we have entered a bull cycle. We're probably a couple of years into that now. It looks like it will be a strong bull cycle, so perhaps another 5 or 6 years to go on that. But of course, nothing goes up in a straight line. I know we all wish it did, but it doesn't happen. So I expect, what's it trading today? 29.30, something like that. I think it'll go maybe 3,100, retrace, 27, 2,800. And what that will do is it will build a new base to go higher. I expect it to go up to in the region of 34, 3,500. Whether it remains there by the end of this year, we'll have to find out. But I'll be very surprised if the gold price does not begin with a 3 by the end of this year.
Okay, good. I like that, Ryan. I like that. So I think one other question has come in just before we finish here. JT again, could you expand on the tailings opportunity that's in Ontario alone? Should you get a licensing agreement over the line? Okay, so should you get the licensing agreement over the line? Oh, expand on it. Okay. Well, I think we probably covered it, but maybe you want to have the final words on the tailings opportunity.
Yeah. So okay, I guess what I'll do is I'll focus on the exclusivity area that we're working on executing. Now that covers all of the Timmins townships. It also covers Kirkland Lake, Larder Lake, as I said earlier, up to the Quebec border. Now, these are two of Canada's biggest gold camps, two of the most important gold camps globally, in some people's opinion. And what we do know is that, that's about 3,800 square kilometers of prime gold tailings estate, with, a mining history that goes back to the 1920s. And we know there's at least 70, historic or legacy mine sites, within those areas. So there's a lot of work ahead of us, and it will give us a fantastic platform from which to develop Fulcrum, and those opportunities.
Okay, excellent. Well, thank you very much, Ryan, for your time. We're bang on time here. So looking forward, of course, to following updates through Q1 and, of course, as we head to the end of the first half. You can stick around, I hope, so we can come back at the end in about an hour's time to have a bit of a general chinwag on gold and everything that's going on with that. But thank you very much. You can take a break, and I'd like to bring in our next guest now, Peter Clousey, the VP of Capital Markets, Silver Bullet Mines. Peter, good evening. It's good afternoon to you, isn't it? How are you doing?
It's around 2:30. Nice to see you again, Mark.
Yeah, very, very, very pleased to see you. Thank you very much for joining us. We're going to talk. You're a silver company, aren't you? Of course, and you've got production going. We're going to cover the Super Champ, the Buckeye, and of course the Washington mine as well. And you have sent me some videos that you've taken. Do let me know when you want me to throw them up, and we can do them. But let's just talk about the discovery of that additional high-grade silver mineralization above the Super Champ vein at the Super Champ mine, which is in Arizona, which of course is already in production. So could you perhaps just give us an overview, first of all, of the project as it stands?
Sure. First, I'd like to congratulate Fulcrum. They have a great project. I'm originally from Timmins. Behind my head there, that's the famous Hollinger gold shaft, the Hollinger shaft on Pearl Lake. So congrats to Fulcrum.
Okay, good.
There are a lot of tailings to be cleaned up. The Super Champ is a miraculous property. If it didn't exist, I'm shocked that it exists. We've been through the numbers. I've had friends call me up and say, you must have made a typo. Go, no, those are the grades. They can't be that high. Yeah, they are that high. We have a perpetual lease on the Super Champ in Arizona, and we pay a royalty when we sell material. So the owner to title doesn't have to invest any capital. We decide when to mine it, how to produce it, process it. And once it's processed, we pay the owner a royalty. It's a very friendly deal for both of us. You have a video there of an excavator, right?
Yes, we do, yes.
Can we tee that up?
We can.
Excavator clearing the overburden. The vein is usually whitish material. It looks like the vein where the excavator is takes a sharp turn to my left and will continue to be chased.
So I took that on January 2nd. I did a site visit because I'm not just the VP Capital Markets, I'm also a director. And site visits to me are important for due diligence purposes to report back to the board. Watching the excavator work was unbelievable. I have never seen a simpler mining operation. It's a 13-foot boom, clear off the overburden, dig up the vein as far as you can reach, throw the material down the hill, and a front-end loader shows up to put it into a pile and eventually into a truck to be driven 7-8 miles to our own mill to be processed. It's the simplest, most low-cost form of mining I've ever seen, and this is in Arizona.
And that's just there effectively at the surface at the moment.
Right. So we have a plan. The plan is to map the surface, try to figure out where the vein runs, what its structure is, put together a tentative mine plan. Based on a tentative mine plan, like you go underground here up the hill, do underground over the top and come up and T-bone it. Based on the tentative mine plan we come up with, we will then put together a drill plan. Based on the results of that drill program, that'll either confirm our tentative mining program or we'll change it based upon the data. And we expect to be drilling sometime this summer, early fall of 2025.
Okay. Okay. So, I mean, what sort of scale here do you see here, the opportunity at Superchamp?
Well, we don't have a 43-101 on that property, so I'm limited in what I can say.
Yeah.
But we have put out into news releases that the vein goes between 3 and 12 feet wide. It seems to average around 8 feet wide. Our best guess is it's running between 50 and 200 feet down. And the grades are phenomenal, with about half an ounce of gold thrown in for good measure.
Okay. Yeah. Okay. Okay.
So as for scale, we'll finish mapping it, and then you and I can talk again about the results of the mapping.
Okay. And that's being planned right now?
It's being planned now. Now we're taking material now and processing it at our own mill and we're processing it into silver concentrate. And that concentrate is fairly easy to sell once you hit minimum volumes. So our goal is to process enough material to hit a minimum volume so we can sell the silver con while we're still processing the vein and planning for the drill program.
Yeah. Okay.
And this isn't a highly exploratory drill program, right? We know the business case that we make for drilling. We know why we want to drill, where we're going to want to drill, and it will be a very targeted program.
So is the objective of the drilling to get a 43-101, or is it to tell you where to focus the excavation activities and where the vein's going?
That's the subject of a very polite argument amongst the leadership team at Silver Bullet as to whether or not we need a resource estimate. There's a cost to that. There's a time to that. We don't have one at any of our properties. We went straight to production, and we've been successful doing that. So there's a healthy discussion underway, and I think the results of the mapping program will serve to inform whether or not we get a resource estimate.
Okay. Okay. And we're talking here sort of multiple vein structures potentially?
It looks like it. You heard in my video there that the excavator at the top of the hill had just discovered an offshoot heading sharply to the left, and he was still tracking the vein behind him. So there appear to be numerous offshoots of high-grade silver.
Right. Okay. Well, that's got to be good, hasn't it, eh?
Well, we found evidence that someone had mined here about 150 to 200 years ago. We found adits that were supported by rotten wood. And, you know, the best guess is it was one of the Spanish that did the work, although we have no firm evidence as to that. But somebody worked this property 150 to 200 years ago.
Well, okay. And this is all, as you say, taken and processed to your site, which is, I think, the plan for the other projects as well, should they be yielding mineralization. Is that correct?
I missed the first half of that, Stanton, how you pulled that together.
So, yeah, this is all processed, as you say, at your own mill site.
Yes.
And I think the plan is to do that with the other projects as well, if they've got mineralization.
Right, except for Idaho, which we'll come back to. But
Okay,
anything in Arizona, the current intention is to process all of that at our own mill. That gives us a phenomenal control over costs.
Okay, and that's all up and running. I know we've got videos here as well, so we can just sort of show that now as well.
We're at the mill now. This is material taken from the Superchamp, brought to the mill for processing. It's two different colors because the reddish stuff was taken from the lower area, and this brownish grayish stuff was taken from the higher area. It's about 900 tons of material. At the mill site, just outside Globe, Arizona, ball mill is spinning. I'm at the mill site just outside Globe, Arizona. Everything seems to be working just fine. There's a good line coming off the table, and all the equipment's working as it should.
I don't think there's any sound on this one, Peter. Maybe you can explain what we're looking at.
Sure. To the left is the ball mill turning. It actually has big steel balls in it, pulverizing the material. From there, it goes into the jig, and off the jig onto the shaker table. Off the shaker table, it goes into the concentrate bag. And there you can see you see the silver line there. It's about 2 inches wide. And that silver concentrate goes into the shaker bag into the concentrate bags, sorry. And the con bags run about 4 tons per bag.
Okay. Okay. So that's all running. Is it 24/7 operation?
No, it's not.
Okay.
We're currently running about 7 tons an hour for 5 or 6 hours a day. Part of the rhythm of getting a mill to work is every material you process is different. So the rate at which it comes through the coarse crusher is different. The rate at which it goes up into the fine crusher is different. The rate at
Okay.
which it goes into the ball mill is different. And so the team is making small field adjustments all the time, because you don't want to be running your high grade material until you're optimized. If you're
Right.
running lower grade material, then you just wind up filling your tailings pond, and I'd have to call the nice people from Fulcrum to come down and do work for us.
Okay.
And I don't want to do that. We want the silver to go into the silver con in our own bag.
Sure. I think one of the next big bits of news would have what we can anticipate would be that first invoice and that check, as you refer to. I think you still use checks over there.
The mining industry is still an old-fashioned industry.
Sure. So that's still anticipated.
In our MD&A of the last quarter, effective December 31st, 2024, we put in the MDA that we expect to be in revenue from the Super Champ this quarter. And that's in revenue under IFRS principles.
Okay.
And we have not put out any statement to the contrary. So you can take it that we still believe that's going to happen.
Okay. Good. Well, that'll be the next time we speak. Well, maybe before, but that's one I can certainly anticipate, Peter. I know we've got other projects and things to talk about, so let's just talk about the Buckeye mine. Of course, I think this is one of 5 past producing silver mines located at the Black Diamond property in Arizona. Right. So you're currently preparing to restart operations here, expecting to be in production again by the end of the year. Is that right? How is it all going?
It's going very well. But we had a decision to make between working the Buckeye and working the Super Champ. Super Champ has higher grades. It's easier to access. So, and it appears to have more gold in it. So a management decision was made to concentrate on the Super Champ for now, and we will get back to the Buckeye.
Okay, good. So I'm just thinking about sort of the other producing mines surrounding that property. Then I think you've got big operators like BHP and Rio there. I mean, are you talking some potential significant upside here at Buckeye?
If you read the 43-101, which God, I don't know anybody who would, but if you do read it, there is some significant evidence of a large copper porphyry underlying the entire property. And as we go along and we build up cash from revenue, it is our goal in the next 3, 4, 5 years to start looking at that copper porphyry to test whether it exists. We've been asked if we will JV or do something with it. It's far too soon to tell.
Okay.
We lack the data.
Okay. So your plan here to explore this would look like what then?
There are other silver mines in the area that are on our property that we'd like to restart. Fairly low-hanging fruit, not as low-hanging as the Buckeye, but the McMorris we would look at, and some of the other mines on the property. And once we've looked at those, then we'll look at the copper porphyry.
Okay.
It might be a 10, 20-year project. I don't know. Because, copper porphyries are hard to explore for and expensive.
Mm-hmm. And at the moment at Buckeye, were there some things, was it the MSHA?
MSHA. Yeah. So the Mining Safety Health Administration, which is part of the United States Department of Labor, they're very good about protecting miners. They showed up at our Buckeye and they made some recommendations. Recommendations, right? So we've been implementing those recommendations and not allowing people into the mine until we finish those. Okay. But it's far more profitable for the company in our perspective to work on the Super Champ than to spend resources at Buckeye for now.
Sure, that makes perfect sense. And then, of course, the other project then, the Washington mine, and there was quite a recent update from this. This is in Idaho. You announced that you've completed the first phase of underground development. So could you perhaps provide some background on this asset? And again, what are you targeting here?
Sure. Well, we're a junior company. We have limited resources. So management made a decision to hire a contract miner. We have a geologist on the ground who's keeping an eye on things, but we have hired a very experienced contract miner. And that person's job is to do exactly what it sounds like. They've been hired to go mine. So go in, dig, take the material out, put it in a truck, take it to a mill, process it, send us a check. Now, it's a little more difficult than that, as you might imagine, but that's the concept. It gives us a fair bit of control over the process. And as we have announced, the contract miner has intercepted the historical vein material. We have put out news releases referring to historical reports on this material of 120,000 tons, grading between 30 and 90 ounces of silver per ton, which is relatively insane because Bonanza silver is generally regarded at 30 ounces of silver per ton, and that's the lowest end of our range.
Right. Okay.
There also is evidence of gold within that 120,000 tons. But when I do my math, I only count the primary mineral. I don't count the secondaries.
Okay, sure.
Unless it's a VMS deposit when everything counts.
Okay, yeah, of
So
course.
our goal is to go in, have the contract miner extract 50 tons a day. Once the contract miner hits a certain minimum volume, put that into the truck, take it to a nearby mill, process it, and get paid for that material.
Okay. I love always how you make things very, very simple, which, as you said, in mining is not usually the case, but you certainly articulate it very simple. So,
well, part of the reason there, Mark, is the contract miner is excellent. Right? We didn't stumble upon somebody. We did research and we found the team that we wanted.
okay.
They have a lot of experience in projects like this, and they're the ones who make it look easy, not us guys in suits.
Okay. And the time frame for this, then you say they've got to get to a certain tonnage before they then take it away. What are we talking here? Can you disclose how much they've got to get to and what time we're looking at?
Our goal is 50 tons a day. And we have disclosed in that MDA as of December 31st that we expect to be in revenue from this mine this quarter.
Okay.
Now, right, they're only taking a bulk sample. This isn't what you would think of as continuous mining. Let's go in, take a bulk sample, process it, even if it's in 4 or 5 pieces.
Okay.
And looking at the speed with which the contract miner is working, that is still a reasonable assumption. Right?
Yeah.
We have not put out news to the contrary, so you can assume that that's still happening.
Okay. So in revenue on 2 silver projects, effectively. Okay, good.
Yep.
And this has been backed up, I guess, by the placing. We call it a placing. I'm not sure. Strategic financing, I think it was worded in the press release there. You closed. Is it about 1.7 million that you closed here?
Well, it's a total of over, we'll call it 2.5 million. And this last tranche was about 1.7 million Canadian dollars.
Okay. Yeah. Okay. So just tell us a bit about, I think, first of all, when you've been talking to investors on this, what the reaction was. You obviously got quite a bit of interest there to get that money.
We're fortunate to have a very loyal shareholder base. We are probably the most transparent junior mining company you've ever seen. We try to stay very current with the shareholders, whether it's through press releases, news releases, or the MDA. We do stay involved on various chat groups, not to make selective disclosure, but to correct any misassumptions and to be able to answer questions that don't involve selective disclosure. So we are highly engaged with our shareholder base because, after all, they own the company.
Indeed. I see you're very active on CEO.ca, of course, where a lot of the shareholders are chatting away there. In terms of how you'd use these proceeds, how are they going to be appropriated?
Advance the Super Champ, advance the Washington mine in Idaho, and general working capital. Now,
Okay.
in the working capital, I include improvements to the mill. To my mind, the mill is like a high-tech car. You bought it, but you're always tinkering with it.
Okay.
Depending on the road you're driving, what time of year it is, you got to put the snow tires on. You're always tinkering with the mill to optimize it. So I include that in working capital, not a capital allocation.
Okay. Good. Well, thank you, Peter. So we can go to some of the questions that I've seen sort of popping up here. So the first one here is Silver Bullet's goal to eventually self-finance its exploration through the revenue it generates, beginning with these streams it has already established.
Well, it's 2 streams. The Buckeye will eventually come on stream, so we'll count that as the third. And yes, until it gets time to explore for the porphyry, it is our goal to self-finance through revenue.
Okay. Good. Is Silver Bullet planning to upgrade its milling capacity?
We're lucky to have a CEO whose skill strength is in milling and processing. John Carter has built mills all around the world. So when he designed this, he designed it so we could almost Lego another 125 tons per day on it. It's currently plated for 125 tons a day, and we can bolt on another 125 tons a day if we choose to get to 350 tons per day. We don't have that capacity yet, but as the data comes in and as we increase the throughput, that may happen.
Right. Okay. Good. Let's see what other questions we have here. Does Peter have oh, this is a good one. A silver target price for the end of 2025. Does he think it will correlate to the gold rise again soon?
I wrote an article this year about the gold silver ratio. I think it's no longer something that can be relied upon. It used to be reliable when gold and silver were both industrial metals. But now there's so much data out there about gold, and they have so many different uses that ratio is no longer reliable. As for a silver price, that's hard for me to control, but I can't see it crashing below 20. And it's going to, in my opinion, stagger to between $35 and $40 by the end of 2025.
$35 and $40 by end of the year. Okay. So that's well, some might say that's a conservative.
Well, look, we made a production decision here at the Buckeye in May of 2020 when silver was at $17 an ounce. Now, COVID changed everything. Changed pricing, it changed availability of labor, changed everything. But if I had to go back and do it all over again, I would still vote in favor of a production decision. And at, what is it today, 33.25? Yeah, we're enjoying the price of silver.
Indeed. It'd be interesting to see how, because I know the paper market for silver is a bit all over the place, isn't it? You know, it's highly leveraged. If that ever gets ratified, or if it never does, I don't know. But I've seen people, saying it's $300. Could be quite realistic.
There are a lot of better informed people than I am as to the paper market, the silver market. Can you go buy physical silver? I'm just concentrating on the job in front of me.
Sure.
And that's getting these properties into revenue.
Okay.
Good. I've told this to you before. Yay, we've rehabilitated a mine. It's not what the business we're in. Yay, we built this beautiful mill. It's not the business we're in. We're in the business of generating revenue through the sale of silver. And I want that to happen this quarter.
Good. Thank you, Peter. What else do we have? Does Silver Bullet expect to see any commercial interest in the Buckeye or other historic silver mines at Black Diamond, given the presence of the majors around the project?
One of the interesting terms of any non-disclosure agreement is you can't even acknowledge that such a non-disclosure agreement exists. So I can't say anything really about that. We are in elephant country, and it wouldn't be surprising if other people came hunting for elephants with us.
Okay. Good. Do we have any other questions here? I know there was one or two, I think, that were, yes. Okay, well, I think you've answered that one. You said by the end of the quarter. Yeah.
Right. So I'm not expecting millions and millions of dollars this quarter, right? We're still figuring out the mill, figuring out the process.
Sure.
But we are still on record as saying there will be revenue from the Super Champ before March 31, 2025, which is 42 days from now.
Okay.
So I'll tell you, as a leadership team, we are painfully aware of these deadlines. We talk about them every day.
Right. Okay. Good. I see another question has come up. In December Super Champ update, Silver Bullet mentioned it was working with a potential client interested in purchasing all of the available concentrate. Is there any update on that?
We're still working on it. Okay. Every purchaser of silver con has a different need and a different capability of writing a check for that con. Mm-hmm. So we're still working through discussions on it.
Okay, good. Do we have any other questions? Otherwise, we can let's just see if anything is popping up here. Well, something that came to my mind. I mean, you were quite. You talked very nicely about Fulcrum. Mm-hmm. Would you look to perhaps leverage your expertise here and collaborate with other sort of gold-focused companies to maybe add gold to the portfolio or the gold credits, of course, that are in your projects?
We're focused on silver and Arizona and Idaho right now. If there were a way for Fulcrum to look at our tailings pond and help us extract value for minimal cost,
Okay.
absolutely, that'd be a conversation. And with the mining show happening shortly, I fully expect to see the Fulcrum guys at the show, and we can talk about it.
That's PDAC you're referring to,
Yes.
Yeah. Okay. Yeah. Okay. Be interesting to see how that show does indeed go. I mean, could you with your milling operation, could you potentially process? Is it just silver, or you can process gold? Couldn't you as well?
We can process it, but we can't recover the gold. We
Okay.
can crush the rock, but the table and the jigs aren't designed to recover the gold.
Okay. Okay. So it's purely going to be a silver processing operation, but you
Well,
could then.
we would have to put a float on.
Okay.
Flotation would cost probably $300,000 to $400,000, and I'm not sure how long it would take to attach. So to process gold and copper would require the float.
Okay. Okay. Would you potentially look to process other operators' silver at your mill?
Absolutely. Part of the business plan that was put together back in 2020 was, if we build the mill and our mine goes dry for whatever reason, we can process third-party material.
Okay.
Right? I don't know if you've been to Arizona, but it seems everybody has a mine in his or her backyard. Everybody
Okay.
has a hole. They've taken material out of it. And it was our thesis that building the mill would give us a third leg of the business plan in case the mill's dried up, the mine's dried up, we had access issues, whatever happened to the mines, we could still generate revenue through the mill.
Okay. 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 So there's a potential, yeah, other revenue streams there. But for you, really, at the moment, it's really about getting that revenue, those sales away, and that check coming in from two mines, two projects, in
Absolutely.
short order.
And then you
Okay.
ramp those up and you ramp those up.
Good. Good. Well, thank you very much, Peter Clausey, for your time this
Thank
evening.
you.
You can hang around for another sort of 30 minutes. Can you come back for the
I
roundtable discussion at the end there? I think we can. I think that's all the questions that I saw there. So we can probably leave you for half an hour and
Can
bring
I
in,
offer one last point?
please.
We only have about 94 million shares outstanding for a company that looks to be seeing revenue from two projects. And we are in Nevada, which is generally regarded as one of the top mining jurisdictions in the world, and in Idaho, which is a very well-regarded mining jurisdiction. So we are very excited about our future.
Good. Well, thank you very much, Peter. Again, as always, and we'll come back to you in about 30 minutes or so. So let's now go to our final guest of the evening. It's got, of course, Nick Tulloch, the CEO of ECR Minerals. Nick, thank you for your time. How are you doing?
I'm very well, thanks, Mark. How are you?
Yeah. Very good. Thank you. Very good. Thank you for joining us this evening from where you are. So we've got a few things to talk about, but the most advanced asset in ECR's portfolio is, of course, Blue Mountain, which is where you are currently preparing to commence commercial gold production. So let's just start. Give us some background to this project and why you can get into that small scale production relatively easily.
Sure. Well, Blue Mountain is an alluvial gold prospect, so a waterborne resource. I was there about 2 or 3 weeks ago, and I guess one of my sort of overriding thoughts is that to a UK listener or UK viewer, we think of sort of large rivers, we think of single streams. Yeah, in fact, Blue Mountain is a whole series of gullies. I mean, the clue's in the word. It's a mountain. It's a very undulating landscape, but it's 12.5 square kilometers of a series of gullies, and you can see up and down the mountains the historic workings that have gone on, which I always find vaguely reassuring. And that if other people are there, you get the confidence that there's a good reason to be in the region yourself. So we're going to start a process during the course of the coming months to bring that into production, and it will be a gravity-fed process, fairly low technology that will see us trenching down these gullies or down the side of the gullies, and separating the gold from the remaining ground through a gravity process.
Okay, and if we just think, you mentioned there about sort of explaining what it looks like to perhaps a UK audience. We probably do have some people tuning in from North America as well, but a mountain like this, or more sort of flat. You said over 12 square kilometers. So what's the terrain like?
More sort of undulating landscapes.
Okay.
So yeah, the reason I start with the description is, from I suppose from in my head before I was there, it was far smaller scale. It was far flatter. It was going to be a single form of water source. Yeah, actually, what you've got is a series of hills. I mean, not just one, a series of hills. Blue Mountain is a is a mountain just next door to our tenement. You've got a series of hills where gullies run down the side of the hills. We put a few photos on social media for those who follow us. And as the gullies sort of wind down the hills, we can see there's been historic workings for gold alongside those gullies. And that's broadly speaking exactly what we're going to do. We're going to apply a little bit of modern technology. We will use some ground penetrating radar to make sure we're in the right location. We will do an overhead survey with drones to make sure we've got a very good understanding of the landscape. But broadly speaking, it's a case of trenching down the side of these gullies.
Right. Okay. So that's what it'll look like, effectively trenching. Which is, I've seen it done. It's just quite simple, isn't it? So just an excavator digging a trench, effectively, and then you'll take samples.
We've done the sampling, so it's more about. I think the next stage is more about testing the ability to bulk process.
Okay.
So we did some sampling back in the summer. We used a Victoria-based firm called Gecko, who I think are probably one of the world leaders in examining resources such as this. And where we've got to now is, as a bit of ground penetration radar. What we want to make sure of is where the bedrock is. When we were sampling back in the summer of last year, or our summer of last year, we never really went down more than 4 meters. And actually the best results were probably in the first 2 of those meters. So the ground penetration radar will show us where the bedrock sits under the ground. The overhead drone survey will give us a much better perspective of the landscape as a whole. There will be some further testing, which is more about making sure that the bulk processing works as planned. And I suppose the next major event on my list anyway is to get a wash plant commissioned. Now we had a very small wash plant we were using for the testing. What we're anticipating is having a wash plant that can process at least 25 tons per hour, maybe a little bit more, or maybe we have 2 wash plants going at the same time. You can buy these wash plants off the shelf, you can buy them secondhand, but they need to be configured to suit the ground conditions. A lot of them are made, for example, in Western Australia, where you've got a slightly different soil composition. What we want to make sure is that the clay that exists around Blue Mountain isn't going to stick to the gold, and we produce a lot of clay and not so much gold. So there's a little bit of work to be done on the wash plant, but yeah, I sort of dress it up all I like. This is a fairly straightforward process.
Okay, and forgive the simple question, but a wash plant simply washes away the easy to wash away stuff like soils and clays to leave you with the stuff you want, the harder stuff.
Yeah, if you imagine a sort of so I get my hands in the right place. If you imagine a funnel at one end where we will literally use an excavator or a bulldozer to tip in the ground, so we're talking about 25 tons per hour. The wash plant is then a spinning cylinder that has a series of holes that will extract the finer particles. There's then a gravity system that will then bring the gold to the bottom. As I say, I'd love to dress it up as a slightly more sophisticated process, but the beauty of an alluvial resource and the beauty of what we can do at Blue Mountain is it is very straightforward. We're only going down 4 meters maximum. This is not sort of drilling 100 meters into the Earth's core and see what we find. It's very much a surface operation.
Okay, and you've mentioned sort of the beauty of alluvial a couple of times there. So alluvial, as far as I understand that, does it mean that it's the mineralization, the gold is sort of just it's kind of here, it's kind of sporadic, it's not necessarily in a vein or in a huge deposit. It's sort of in some cases lying at surface, but kind of dotted around. Is that right?
Yes, it's fairly widespread, and also the particles can be very, very small. I mean, so much so that not necessarily visible to the naked eye. This is not sort of chipping away at the rock and finding a large nugget and sort of hold it up to your friends and look what we've got. This is about finding a large quantity of very small particles of gold. I mean, to try and put it into context, our modelling, we're always very conservative in the modelling. Our modelling assumes 0.6 grams per bank cubic meter. So cubic meter of earth, 0.6 grams of gold. That's the level we're predicting. Now, again, just to set that in context, we had much higher results in some of the testing. but going back through some of the historical workings and again just being conservative, that's what we're assuming. So we put out an RNS earlier this month, and we indicated that at that level of gold, so at 0.6 grams per bank cubic meter and at 25 tons per hour, if that's the wash plant we go for, we could be doing revenue of a little under 500,000 Australian dollars per month. I mean, that gives you an idea of the scale of the opportunity before us.
Okay, about 500 per month. Okay, that gives
just a bit under 500, yeah.
Yeah, okay. So that's what you sort of, back of the napkin sort of, calculations there.
Yeah, a bit more than a napkin, but
Sure.
yes, it's until you get started, everything is a projection, and so we've kept it fairly modest. Yeah, so that's at 25 tons per hour.
Okay.
That's one wash plant. Now, of course, you can scale up over the size of the territory we've got. You could have 2 teams, you could have 2 wash plants. You can start increasing that tonnage.
Okay.
The one thing we probably have to watch out for is water. Sounds slightly sort of contradictory for a northern hemisphere audience, but although it's an alluvial resource, we are talking about Australia here. Water resources are fairly scarce. You need around about equivalent volumes of water per tonnage of ground that you process. Now we can recover the water, and we will recover the water. So it's not quite as extreme as I just described, but that'll probably be the main limiting factor as to how much we can do. But as I say, we're targeting 25 tons per hour, and that's where I got the just under $500,000 a month.
Okay.
Australian dollars.
And that's why it's so good just to go and dig these trenches, because you effectively just scoop up the earth and drop it into the plant, and it processes through. So it's just really small bits of gold effectively, but you just scoop it up, drop it in, and out comes the gold effectively.
Yeah. In the past, I've sort of slightly tongue-in-cheek described it as panning for gold on an industrial scale.
Okay.
I said we're not the first people here, and you can see around the fields, other people have gone for a similar process, and there's various pits dug in certain places. But going back some years, I suppose the old timers, if that's the right word for them, they'd be going for what they can see, and what we're targeting with an almost 92% recovery rate, and that was proven by Gecko in our testing last year. An almost 92% recovery rate. We're also picking up what the naked eye is not necessarily going to see. So that's my panning for gold on an industrial scale.
Sure. I mean, does the project offer any other upside beyond the alluvial gold potential through further exploration, or is this really alluvial, sort of small scale, easy revenues?
In our modelling, we've assumed it's the latter. It's an alluvial resource, but the gold has to come from somewhere. And something I did with the team when I was out there is we did climb the hill. We've gone to where we think maybe the gold began. I mean, it has to come from somewhere, and we found some quite interesting rock samples. We actually put them in for testing. It's quite possible there's some other minerals there. I mean, we're not going to know for sure. We're not going to know quantities, but just from what we saw on the structures, and again we saw historical workings. I mean, right at the top of the hill, someone has dug a mine shaft, so there's been something there in the past. I mean, the records are long since destroyed. That would be a bonus. I mean, our assumption is this is gold only. There's nothing else we're going to come across, but the acreage is quite significant, and if we can find further opportunities, further minerals, clearly it would be remiss of us not to look at them quite carefully.
Indeed. So, I mean, how are the preparations going then for production here at Blue Mountain? What sort of time frames are we looking at? I know it's always a tough question, and of course revenues, but what time frames are we looking at for revenues to potentially begin?
I suppose the answer is we're looking at months. I'm always loath to give an exact answer, because we're sort of held to it, and then and then punished if there's any changes. But it's the message is it's not a complicated task. What we would like to do, and this really came out of the site visit from a few weeks ago, we would like to do an aerial survey. We would like to do a GPR survey as well. That will give us a much better idea of where to dig. I mean, the worst thing we could do is just turn up on site with an excavator and just start digging trenches and hoping for the best. I mean, that's clearly a waste of time and a waste of money. So preparation will make the task, make the project far more efficient and far more successful. I'm very confident of that.
Okay.
Whilst we're doing those surveys, we will commission and have this wash plant built. As I say, the toss-up at the moment is, do we start from scratch and build one to our own specification? Do we buy one off the shelf, so to speak, and modify it? Yeah, if I had to call it, I'd probably say the latter is maybe the slight favourite at the moment. But it's about getting it. Well, it's about getting it right first time. Yeah, this is maybe a sort of $50,000 plus piece of equipment. We don't want to drag it all the way out to Blue Mountain and realise we've got the spec wrong, and it's not going to separate the gold from everything else.
But that discussion, that thought's going on now. The procurement process has started, has it? The planning process?
Oh no, it started. We've already identified suppliers of wash plants. We've already identified people who can build one from scratch. We're probably better connected in Victoria, so in terms of the building from scratch, and we do have a yard down in Victoria as well. I think probably the temptation will be to do that there. If we take one off the shelf, the bigger suppliers are in Western Australia. No surprise there, given their resources. There's also a few available secondhand in the northern part of Queensland as well. And I often say to people, I'm a Scot, I'm allergic to spending money. If we can find one up in northern Queensland that's going to suit our purpose and we can amend or configure, then we'll certainly do that. Again, this is about getting it right, and the temptation is to rush out on Monday morning, buy a wash plant, wing a drone over it and hope for the best. I would rather take a couple of months and make sure we've got the locations right, got the team in place, and the team will be absolutely critical here. We're probably looking at having about 4 people on site at any one time. Having a good site manager will determine the success of the operation. So again, you're rushing into it, picking 4 guys up from the local pub. We'll get into production, but we'll probably produce nothing at all. So having the right team, the right equipment, and the right location, that's the task over the next few weeks.
No, good. Well, it sounds like you're taking it seriously, and having a good site manager, particularly, of course, you don't live there. We're very far away over in Europe here, and of course, the co-director Mike as well. You're not on the ground, so putting good people in place, a good site manager, like I say, I think is very important. But that sounds really good. So that, in theory, means that within the next sort of perhaps 2 to 3 months, we could be talking, and you'd be getting equipment sort of arriving on site.
Yeah, I mean, in terms of equipment, quite possibly sooner than that. In terms of the surveys, definitely sooner than that. So I think investors should predict a fair amount of news flow over the coming weeks and coming months as we start putting these plans into place. And as I say, I'd like to dress it up and say it's incredibly complex and this is cutting edge technology. It's not really. I think to do it at this scale, I think is clever, and we've employed Gecko to make sure we get it right. But in terms of looking for gold through alluvial resources, this has been done for many centuries.
Indeed. Well, thank you, Nick. I know we want to talk about a couple of things before we go to the Q&A. So let's just talk about Lulworth then, where you're advancing discussions with contractors for a proposed maiden drilling campaign. So could you tell us a bit about what you found at the project and indeed, of course, what you hope to find through the drilling?
Yeah, of course. I mean, if Blue Mountain is big, and it was certainly big to my eyes, Lulworth is a totally different scale. I mean, this is our biggest single tenement. Over the last couple of years, we've done a number of different programs there, looking at rock sampling, looking at stream sampling. We've actually made an announcement just last week on the latest results. And what we're getting consistently is very positive findings, particularly actually in our announcement earlier this month. Where we're getting to is, if anything, an extension of where we think the opportunity is in Lulworth. Now, Lulworth is predominantly a gold resource or a gold prospect. We have had rare earths there as well. We've got a couple of partnerships in place. The drilling is going to be primarily aimed at proving up that gold resource that we believe exists there. It's going to be a shallow drilling campaign. It will be RC drilling. We did a diamond drilling campaign at Tambo recently. This is one of our projects in Victoria. This will be an RC campaign. Probably quite a lot of quite shallow holes. That's what we think the geology at Lulworth merits.
Okay, and when do you think or hope to be able to doing that drill, and then of course the results from those drills?
It's back on predicting timings. I would say in the first half of this year. So Lulworth is further north than Blue Mountain, and in the northern part of Queensland, it's really not possible, or certainly not sensible, to be conducting work with heavy machinery during the rainy months.
Okay.
So round about sort of November to March, you wouldn't want to be taking sort of heavy drilling equipment up into that region. So that sort of takes us at least another sort of 4 or 6 weeks out, and then I think once we're in out of the rains, we'll start looking at getting a drilling team up there. We've already started talking to prospective contractors. I think we've earmarked one that we're happy with. It'll be a case of fitting in with their diary as well. But a little bit like Blue Mountain, we're talking months. Blue Mountain and Lulworth, they're in the same state. I mean, Queensland. I think you could probably fit the whole of the UK into Queensland without touching the sides. But what we will do, particularly with our geologist team, is split them between working in Blue Mountain and working in Lulworth. So, for example, I mentioned we'd been doing some bulk sampling at Blue Mountain before we really get going. It may make sense to perform that bulk sampling. The geologist, which is Adam Jones, can head on to Lulworth up to the drilling campaign there whilst we wait for the results on the bulk sampling. These are just ideas. We'll see how the timing goes, but we'll try and use the time sensibly for the team, so we're not going backwards and forwards too much.
Okay, and Lulworth is a very different project to Blue Mountain. What would a successful drilling campaign look like?
I suppose simply it would find gold.
But very simply, you would hit gold. Yes.
Lulworth is a much earlier stage resource. There again, there's been historical activity, but nothing like what we've seen at Blue Mountain. The work we've done at Lulworth over the past couple of years has shown there is a high level of prospectivity for gold. The rock sampling, stream sampling I mentioned earlier has shown that. We believe it's relatively close to the surface, and so a large number of shallow holes will hopefully give us an indication of the depth and breadth of that resource that we believe sits there. So as we did, I suppose, in Victoria last year, we did some a percussion drilling in Creswick, and that was at 2 locations. This is going to be fairly similar, although not quite the same depth, and we'll use the time therefore to put in more holes.
Okay, good. Well, thank you, Nick. We are on time for the Q&A, and I do see some questions coming in, and on the Telegram group as well, which I'm just keeping an eye on my phone. But let's just go for this one here. Are you still targeting disposal of MGA? That's, of course, those famous tax losses by the end of February.
Yes, I mean, over the last few months, I think we've been seen as a sort of a company with tax losses than a sort of small gold prospect on the side. We tend to see ourselves as the opposite. I mean, just for those who aren't familiar with it, MGA is a subsidiary we have in Australia. It's actually the subsidiary we carry out most of our operations in. It has been around for the best part of 20 years and has accumulated $75 million of tax losses. Previous management teams at ECR have made an attempt to sell those tax losses. It hasn't really gone to plan. Where we've got to, and perhaps we've done it slightly differently, we are in talks with a group called Octo. They're a private company based in Australia. They have other projects that would be suitable for matching up with those tax losses. And the target, specified by Octo actually, the target for Octo is to complete this by the end of February. So we're sort of hurtling towards that fairly quickly. I always stress to people this is an unbelievably complicated transaction. M&A has its own complexity. Just buying and selling companies always has unexpected items. When you're dealing with tax losses, and therefore you're dealing with the Australian tax revenue service, you've got an exponential level of complexity on the top. I'm really pleased with how the discussions are going, and I'm particularly pleased that even though we haven't closed with Octo, we're still getting inbound inquiries from other people, which tells me that we've got something right. We've got the marketing right, we've got the structure right for helping third parties realise the tax losses, and that's really what it's all about. They will pay us a share of what they can recover from the tax losses. So we're pleased with how it's going.
Okay, yeah. So for you as ECR, it means cash into the bank effectively.
It literally does. The deal with Octo is that they would pay us $4.5 million Australian dollars for MGA. Now we will take projects out of MGA before we sell it. We have to sell it with some projects, and we have tentatively specified Bayliston, which is one of our projects in central Victoria. The tax losses always travel with the company, and the tax losses are only usable if the company is an operating company, so you can't just sell it as a shell. And yeah, hence part of the complexity. But yes, we're pleased with how it's going. We're pleased with the inbound interest we're getting, and I'll continue to bite my fingernails and battle with the lawyers and battle with the other processes. But so far, so good.
Yeah, and as far as you're aware, it's still on track before the end of February, or by the end of February.
If it was not, we would have to make an announcement. And yeah, again, just to stress, it was Octo's proposal that it was the end of February, and we were happy to accept that. That was a sensible target to aim at.
Good. Perfect. Another question here: are rising gold prices prompting some increased third-party interest in ECR's projects?
I mean, yes. I suppose two answers to that. Actually, rising antimony prices are prompting a lot of interest in our operations. Now, I mentioned that Bayliston is the project we've earmarked to sell as part of MGA with the Octo transaction. Bayliston has got quite an interesting antimony prospect where we've had a grade of up to 32%, having reprocessed previous drilling results. Antimony is up something like about 5 times in price over the last 12 months, and certainly I've actually looked at it today, but certainly last week it was continuing to rise. Antimony is becoming, I think, one of the most sought-after metalloids or resources in the world at the moment. And with Bayliston's 32% result, that's attracting quite a lot of inbound interest. So yeah, slightly different answer to the question that's asked. In terms of gold prices, I would probably answer it in reverse. We have been very interested in expanding ECR and looking at other opportunities. And what we're finding is that with rising gold prices, that's actually creating quite a lot more opportunity across the M&A space. We've seen a number of opportunities, some of which we've been fairly cautious about taking further. But as the price rises, that tends to free up a fair bit of M&A, which is certainly what we're interested in.
Okay, interesting. This question I see did pop up, and I think it does. It did cover. I just put that back one just briefly. Yeah, you effectively answered that question with the antimony, and that comes from Bayliston there, the tax losses. So yeah.
Yeah, I mean it's a little bit of both.
Yeah.
We're not going to be able to sell MGA unless we include a project. We like all of our projects, so at some point we have to part with one of our children if we're going to make MGA work. We selected Bayliston, which was a project that appealed to Octo at the time. Clearly, it appeals to other people given the interest in antimony. There's nothing to say anything can't be restructured, right up until the last minute. But clearly, we're not going to make a mess of what's already a complicated transaction. Sure. So we'll stick with Plan A for the time being, but let's see how we go.
Okay, good. And another question I saw popped up there: would ECR consider projects outside of Australia?
Yeah, absolutely. In the past, ECR has been very well travelled, and has looked at projects in the US, in Argentina. So we would not be the first management team to look elsewhere. I mean, as you observed earlier, we're not based in Australia. So if we were to find something else that was of interest and it wasn't in Australia, that would not be a prohibition against proceeding. I think a fuller response would say it's really all about the project. We're not buyers just because we can buy. We're buyers because we think it would be beneficial to expand the company. If you run a small listed company, I mean, as you know, there's a certain amount of cost that goes with it. Whether you've got one project or 101 projects. So there is a benefit in expanding our business. We've had good support from investors. We've had some good inbound inquiries on a number of different things, and we will continue to examine those as we travel through the year. Same applied, by the way, last year. We didn't buy anything last year. We looked at a lot of things. We were quite cautious in how we approached some of the opportunities, but not without enthusiasm. And if we can find something that fits the portfolio well, and we think with our skills we can make it better, we'll absolutely look to expand the business, irrespective of whether it's in Australia or elsewhere.
Good. Okay. Well, there's probably some good opportunities as well, I would say, given the maybe not gold projects with the price of gold, but other commodities maybe that are not as in favour yet. So I'm sure there's a few things crossing your desk. Where, where is Mike tonight? He was good value last time.
I couldn't say. He's probably watching the football, perhaps. I'm not sure.
I would hope he'd be watching this. But
I don't know.
yeah.
I'm always cautious about watching myself back, so perhaps he feels the same.
Oh, yeah, maybe. Potential. Here we go. Potential for niobium and tantalum at Lulworth. Would you be drilling these targets as well?
I mean, yes. I mean, the primary target is gold.
Yeah.
What we have with the rare earths is we have two partnerships, one with James Cook University and one with the Geological Survey of Queensland. Those are both announced in the sort of second half of last year. What both of those do is they give us a little bit of a free pass at examining the rare earth potential in Lulworth. What we've found in the past is where we've been sampling primarily for gold, we've also picked up some quite interesting results for these other minerals. I would expect that to continue. We'll see how we go with the drilling, but I would certainly expect that to continue. But I think it would be careless for us not to allow the GSQ and also James Cook to lead the way on that, given their expertise and, given bluntly, they're paying for it.
Okay, good. Let's see if there's any other questions here. Is Brewing Lane property over the line yet? Is that the land sale, isn't it?
We have some surplus land in Victoria which we're selling. We are very, very nearly there.
Okay. I think Nick may have just temporarily frozen. Sorry, Nick. Yeah, you said you just froze very briefly, but you said we're very, very nearly there.
We're very nearly there. Then the good bit was missed. The buyer had to carry out a survey. Essentially, they're getting a mortgage to buy the land. The land is residential, by the way. I mean, this is the odd thing about one of my predecessors buying the land. It's zoned as residential, so the buyer is essentially getting what is akin to a mortgage. The surveyor has been out. They're given the tick in the box, and I'm expecting it to complete very, very soon.
Okay. Good stuff. Oh, here we go. Nick's gold prediction for the end of 2025. I think you missed Ryan's prediction because you probably weren't online at that time. And Ryan, I think from memory, said he thinks it would go to maybe 300, but then pull back and maybe pull back to 2.7 and maybe settle around. Basically, I think it was settling around 3,100. I think was his prediction by year end.
I think that sounds pretty credible. Gold tends to respond well when there's a lot of problems in the world, and we seem to have a lot of problems just now. My prediction would be above 3,000 by the end of the year. I could see it sort of running away and then pulling back a little bit, but we will become quite interested in the gold price once we start producing at Blue Mountain. Sure. Our own forecasts sit quite somewhere below that. So if we got above 3,000, I'd be very pleased. I think our shareholders would be as well.
Okay, good. Do you have an update on what's happening at the Tambo project following the results that were back in December, I think?
Yeah, we carried out a maiden drilling program, or maiden diamond drilling program at Tambo in the latter half of last year. The results sort of came hole by hole. So the lab we used was maybe a little bit slower than we would have liked in terms of producing the results. We put out a series of announcements. What we were looking to prove was the scale of the potential gold showings below a historic mine. Again, Tambo is another property where we have historic workings. The drilling results have demonstrated that mineralization continues down at depth. We've begun to form a model as to where we think that mineralization sits. The next stage would be a further drilling campaign. I think it's probably fair to say that in our sort of list of priorities, Queensland is trumping Victoria just at the moment, just given you're always going to focus on where you think the best opportunities are, and Blue Mountain is a standout opportunity, with Lulworth in second place. That is not to be interpreted as we're not impressed with Tambo. We were absolutely delighted. The drilling campaign did exactly what it was meant to do, and the next stage would be to do a more fulsome campaign. So that's certainly something we'll be looking at in the latter part of this year, I suspect. Okay. But as I say, Queensland is probably the focus in the near term.
Okay. And in terms of you're fairly well funded, I think, aren't you, for all activities, at least for this year?
We are fully funded for all of our activities in the ground for 2025. We did a placing or a subscription back at the end of last year, and that covers our costs for everything we have planned. So, okay. So we're sitting in a pretty good position. And if we can get into revenue with Blue Mountain towards the end of the year, we'll be very pleased indeed.
Yeah, good. I think looking at companies at the moment who are pre-cash, going into cash, such as yourselves, also Silver Bullet, Fulcrum perhaps a little bit further down the way, but that's where I think a lot of the institutions are looking now. Anyway, talking to certainly Gervais at Premier Miton, looking at companies that are going pre-cash to cash that are undervalued in this space at the moment, where valuations are pretty low.
Yeah, Gervais
So,
has said exactly the same to me, and I couldn't agree more. I mean, small cap resources companies, historically we find things and then we try and pass them on or sell them on. Breaking the mold, as we're seeking to do by becoming revenue generating, covering all of our cash costs, which is certainly what Blue Mountain can do if it performs as we expect. That would be a fantastic position for ECR to be in, and a complete game changer from our rather extensive history.
yeah, and like we said, breaking the mold, I'm sort of seeing it a bit more. Maybe people have got fed up of the state of the markets. It's like we have to do something different. I don't know. Maybe it's a changing of the landscape, get into cash flow. I don't know, but I'm seeing more companies starting to do that. I think that's really key. Gervais, is he a shareholder? Do you know? Can we disclose that? I don't know.
He is not a shareholder as far as I know. I mean, certainly Premier Miton are not a shareholder, but
Right.
I've known Gervais for quite some time.
Okay.
In my sort of investment banking days, I used to take clients along to see him, and I'll continue to talk. And his mantra is exactly as you described. That inflection point where a company goes from pre-cash to generating cash. His view is that is where revenue is. Where the valuation is likely to increase at the sharpest rate, and I couldn't agree more. Yeah, and it's exactly what we're looking to achieve this year.
Okay. Well, next time I speak to Gervais, I will ask him if ECR is indeed on his radar. But,
and if not, why not?
Yeah, precisely. Yeah, precisely. Well, thank you, Nick. So we're nicely on time to just come back for a bit of a round table discussion. So I'm going to bring back our other guests now. So we've of course got Ryan, me, and Peter Clousey. So this is a bit of a sort of a question time style. Peter, you might not be familiar. That's a UK BBC show, but effectively I'll sort of pose a topic, so to speak, and then we can discuss it.
Okay.
So it's going to be a little bit more gold focused. I do apologize, but silver will come into it as well. But I want to talk first of all, about the impact of high gold prices on project development and economics. But let's say gold and silver prices. So with the current bullish sentiment in the market for gold, how does that influence your project timelines and investment decisions? Are there any changes in your strategic approach to capital allocation due to gold prices? Now, I know, Nick, you mentioned there you were still taking things nice and steady and slowly doing things right, but you have just spoken, so I'll let you just catch your breath a moment. I might come to Ryan first, because you've been sat around. What do you think on this? Is the gold price and that bullish sentiment encouraging you to act faster, move more swiftly?
Not really, to be honest, Mark. As you know, Nick and Peter at both of their companies, Fulcrum are, we're focused on, bringing cash generative opportunities into Fulcrum. We started doing that at a gold price of 2000. As I said earlier, we've got a pretty robust program to deliver this concept that we're building. And you can't rush concepts, so I'd love to fast track that to being cash generative in a couple of months' time, but we're targeting a concept which is going to deliver thousands of tons a day. So that's not really something we can just go, right, okay, let's flip the switch, let's stick a few extra quid in the to oil the wheels to make it go faster. But of course, with the gold price, and Nick alluded to it earlier, it does actually make M&A a much more palatable opportunity for both sides of the equation, and that's from vendors and for prospective partners. And so what it's actually done is it's kind of freed up a really stuck market. People with projects which perhaps have been stuck on the books for a long time, and people are now starting to look on how can we monetize these assets, how can we get work done on these projects. prioritizing projects which have that cash generation potential. So,
Okay.
what I would say is that the gold price has actually opened up a whole lot of opportunity for companies that are that have the agility to move quickly and decisively, and ultimately be a bit brave.
Okay. I like what you said there, Ryan. Free up a stuck market. Peter, would you tend to agree with that?
I'd agree with 80% of what Ryan just said.
Good.
Part of the problem, though, is you can't just flip the switch on a gold project.
No.
There's community engagement, there's environmental, there are archaeological studies. These things, by their very nature, take time. So you can't just say, hey, let's put that project into production today, unless you're lucky enough to be the Barracks and the Agnico Eagles of the world with the capital to burn. There are some projects that are easier to turn on than others. Tailings is probably easier because you're not exploring, right? You pretty well know what you have. Now it's just a question of doing it. So a tailings project, a slag project is probably easier. And silver is probably easier because the veins are so much bigger, right? The vein down at Super Champ is up to 12 feet wide. So even the VP of Capital Markets can see where the vein is. Whereas with gold projects, it's little flecks in the material. And you need a really good mining engineer to chase that. I think it's easier to turn on a silver project than a gold project, but it's still hard.
So you're not rushing ahead either. You're not getting ahead of yourself.
We have a plan. We had a plan back in May of 2020. And although COVID diverted us a couple of times, and finding the Super Champ certainly diverted our attention in a positive way, we are still on our business plan. Okay. Generate revenue from the sale of silver.
Nick, what do you think then, apart from perhaps getting excited as we all do about gold, looking at it every day? Does it change the strategy at ECR?
It probably doesn't to any great degree. I'd be just as interested in Blue Mountain if the gold price was half where it is just now. And I think in terms of our other projects, I'm naturally impatient. I think most of the board on ECR probably have a similar feeling as well. But as I said to you a few minutes ago, we'd rather get it right. We'd rather take our time and get it right. So I don't think the gold price is really making a huge amount of difference in terms of the acceleration of our projects. But what it is doing, and I know I touched on it, and Ryan said the same, it is making some changes around the market, and we're seeing opportunities, third-party opportunities, I don't think would be seen, or maybe wouldn't be in quite the same form if the gold price was lower. So we're a gold business. The higher the price, the better for us. But actually, the higher the price, I think maybe the more opportunity it's creating, not so much for our projects. I mean, clearly our projects will be better if we produce gold, but for third-party projects that are coming across our desks.
Okay, interesting. Okay.
I haven't seen any of the juniors sprint upwards in conjunction with the price of silver at 33 and gold at wherever it is today, 3,400. No. The juniors are moribund, and even those with good projects, unless you're close to production, you're not getting a reward.
Yeah, share prices often lag the commodity price, but I suppose our feeling is that as we get into production, then the price becomes a whole lot more relevant to where we're trading. But yeah, as I say, it's not going to change what we do. I'd be just excited about Blue Mountain if the price was different. It's a good project regardless of the price.
Mm-hmm. Peter, just on that point you mentioned there, why do you think that is? Is it just the state of the markets at the moment? There's a lack of capital around, or as Nick said, valuations follow the underlying commodity?
I gave a speech on this a couple of months back in Toronto for a variety of reasons why there is very little capital for the junior mining market. Part of it is how much capital got destroyed in the cannabis market and in the crypto market. And the risk-taking investor got crushed in those two markets, apart from the lucky few who got out at the right time. We need to replenish that pot of capital, the risk-taker capital. And I haven't seen it for a while.
Okay. Yeah, it will take time to replenish that for sure. Okay, interesting. Now, just sticking on the gold price still here, with rising gold prices, does that also affect the operational costs, especially in terms of labor, equipment, materials, etc. So what I'm saying here, as the gold price goes up, and of course, you can make more money, does at the same time the cost of your OPEX, your cost of capital go up as well. Peter, what do you think about that?
I'm just running through my head what our operational costs are. And the only item that would impact is the royalty we pay at Superchamp out the back end. It's a flat rate. So the dollar amount would increase as the price of silver increased, and for the half ounce of gold that we found with it. But that's only as a percentage. If we're paying the royalty holder more, that means we're getting more in absolute dollar terms. Other than that, I can't think of any way that a higher price would negatively impact us.
Okay. Nick, what about you with your sort of thinking about procurement, etc. at the moment?
No increase in cost at all.
Okay.
And in fact, the cost that ECR has been incurring over the last 18 months or so has been less than the prices it's paid in the past. Yeah, and I think that's more a reflection of our determination to go out and put things out to tender. But yeah, even over the last 18 months, I've not seen any increase in price that I would attach the gold price. I mean, clearly inflation's going up, and I think we all have environmental and regulatory costs. But no, I'm not seeing any contractor say, "Oh, yeah, by the way, guys, the gold price is higher. I'm going to stick 10% on my fee." Yeah, that's just not happened.
Okay. Ryan, any thoughts on this?
Well, I think Peter and Nick cover both of the angles on this. Really, I think that as you go in production, NSRs are just part of the equation when you're producing. So obviously, the more revenue you create, those NSRs become more valuable and you pay out more. But again, that's a percentage, so you don't lose out. And of course, you look at the reasons why the gold price goes up, and that's because of the volatility in the financial markets. So there's always some knock-on effects into everyday life. So that will affect, like the labor market, inflation. But fortunately, where we are, we're in really well-established mining camps. There's good employment opportunities, so you're not seeing, inflation busting, labor rates. And I think we all try to keep a pretty streamlined ship as it is. I don't think there's any kind of extravagant expenses that we deploy on our projects. So we haven't really been affected too much, to be honest with you. But there's as Peter said, I think really the biggest risk here is, can we attract that risk appetite from the investors back into the industry? That is that's the golden goose that we're all chasing, right? That's why we're all looking at nearer term production opportunities. We're all looking at different scales of doing that, different timelines, but ultimately we're all channeling all of our company resources to get to that revenue generation. And I think it's pretty vital, to be honest with you.
I'm more curious about the antimony, or antimony, as you Brits like to say. China's producing roughly 55% of the world's antimony. It's a war metal. There are export restrictions upon it. These are geopolitical factors that can change with the stroke of a pen, but I don't see that happening soon. And the antimony is a very attractive element right now.
It is. And I think further to that, Peter, I think what you're seeing, I think everybody's seen the US is repatriating gold. You're seeing a lot of, reshoring of, metals, and that goes, across the battery metal space. It's now going on across the precious metal space. So it's going to be really interesting to see how that pans out. We built this financial derivative market whereby we can all of a sudden create extra ounces of gold and silver and this, that, and the other. But this reshoring could really fundamentally change the shape of the market. I was reading the other day that, again, sorry about it being gold focused there, Peter, but it's estimated there's over 20 ounces of gold on paper contracts to every physical ounce of gold out there. So that's going to be really interesting, and it's interesting for Peter because I think it's even worse for silver. And I firmly believe gold has a future in the settling of the financial volatility globally. I think that will affect silver in a delayed but very, very significant way also. And again, you look at the reasons for the volatility. It's not just the financial markets; it's the geopolitical tensions, and this is leading, a lot of companies to say, "Hey, hang on a minute, let's have a look at these byproducts." You're hearing about people not testing for antimony. In the past, you're seeing people going, "Oh, hang on a minute, I've got 10%, 20% antimony here," because all these byproducts, I say, they're kind of been discarded on the heap because everyone focus on your gold, your copper, your zinc. Do you know what? It's because people understand it. These kind of more obscure metals. Antimony being like a war metal, as Peter put there. These are all really developing markets, really. So a lot of the direction of that's going to depend on, how these geopolitical tensions go. Can't really see those being settled. Well, certainly not this year. I think it's just a really interesting time, and I think for companies like ourselves here, looking for that near-term cash generation, I think that's where you want to be as a risk taker. That's the way I look at it.
Ryan, we are the example you just gave, and also to Peter's point on antimony, as I would tend to say it. We reprocessed.
Say aluminum.
Aluminum. I'd rather call it aluminium, but we reprocessed some core that was drilled some years ago, long before I joined ECR. We reprocessed it looking for antimony. We got a 32% result. And I think with hindsight, perhaps not so surprised, because right across the fence, our neighbours are doing terrific stuff in antimony. But you're right, people are going back and looking for minerals and metals that were perhaps not necessarily relevant previously. And maybe to sort of answer Mark's question a minute ago slightly differently, does the gold price change what we're doing? No, it doesn't. But does the antimony price change what we're doing? I mean, it's certainly opened our eyes to a completely new opportunity in our tenements that were never taken for antimony, and I think probably the same is true of our nearby neighbours. But suddenly we're looking at something potentially very valuable that we didn't necessarily appreciate when the tenement was taken on originally.
Tantalum, cesium, tungsten, gallium. Like, these are the most boring things on the planet. They're even more boring than the daily price of cobalt out of the LME. But we need these. Tungsten is a war metal.
Yeah.
Missiles don't fly. There is no defense.
Mm,
and the price of those things should be impacting exploration decisions. I don't think the price of gold or the price of silver should be impacting exploration decisions.
Yeah, I agree.
Yeah.
Okay. Good. I just want to touch a little bit on perhaps technologies or innovations or operational things you can do on the ground. I know we're all talking here, but not getting too ahead of ourselves, not getting too excited and rushing in, but we do want to get to production, to revenue as soon as we can. So, I mean, I think it was it was Nick. You were saying that it sounds very simple. It's just like a wash plant and then a gravity system. We've seen the videos of Peter there, the ball mill, and then something in between, and then going to a shaker table. Is it really that simple when it comes to processing metals like gold and silver, or is there anything, other technologies you can do to indeed speed up, or if it's not technology or equipment based, things you can do operationally to sort of speed up and also de-risk the projects going forward? So who should I ask? I'll ask Nick first. What do you think of this?
I think certainly in the preparation there absolutely is, and when we were talking about Blue Mountain earlier in this call, two things we want to do is we want to do an aerial survey. We'll use drones, and we want to use ground penetrating radar. And that's aimed at preparing our plans a little bit better than simply arriving with an excavator and cracking on and digging. Gold, I suppose, has the benefit of being a noble metal. It's not going to combine with too many things. So in terms of the processing, yeah, I'm not sure there's a whole lot of technology that's necessarily going to change what we're going to do. But I think the learning ahead of time is important to us. And yeah, I said rather flippantly earlier, yeah, we're naturally impatient and we want to get on and do things. But more than that, we are very conservative about in our preparations. Yeah, and Blue Mountain's an easy example to give, but the same applies to drilling in Lulworth, drilling in Tambo, looking at the other projects. We want to make sure we get our preparations right. And I think where we're using technology most is to learn about what we think is under the ground, learn about the topography as well. I mean, yeah, hence the drone survey, yeah, and using that technology to hone in on where we think we're going to get the best result.
Okay, good. Ryan, you're sort of using cutting edge technology along with very old fashioned auger hole boring, aren't you?
Yeah, we have been. What we're essentially doing is going through a process of, de-risking, the adoption of new technology.
Yeah.
The kind of ore body that we're dealing with, in tailings in Kirkland Lake is refractory in nature, so it is complex. And the reason why cyanide-based methods, haven't really worked to any degree of economic viability is because you have several forms of gold. You have some free held gold in that tailings. You have some disseminated, but you've also got tellurides in that, and that essentially traps the gold, and the cyanide hasn't been able to access that. But what we've shown with the technology that we're using is that we are able to release some of that gold, which is why we've been able to, come up with, what's pretty impressive, recovery rates of 60%. And actually further to that, that's just for the leaching. There's some additional processes that we're going to add to that as we build out that concept. But this is now for us about being delivering a real robust concept, with a new technology. It's absolutely required. I think everybody that's been active in the mining space, going back a few decades, will be able to recall, people saying, "Hey, look, we can reprocess this tailings. It's going to be easy," but it's failed. Peter's nodding, he knows. So, for us, we think that this technology could be a real disruptor in the industry, particularly for tailings, and maybe even on the back end of existing tailings ponds, and maybe even future adoption in new mines to limit or even remove the need for tailings ponds. But again, we need to take investors and stakeholders on that journey to not just show that this technology works, but actually that we can deliver a really high confidence in that it works. It's a barrier we need to overcome. There's some serious tailings projects which have been attempted and failed in the past in the Timmins region. And
Go to Sudbury, right? There's that tailings thing. It's 4 kilometers long.
Yeah.
At Coniston, right?
Yeah, the name escapes me now, but I think the government have just started a program to try and clean those tailings up. But and being a bit more central to tailings, for the last 40, 50 years, there's been this real effort to say, hey, let's try and contain these things. But do you know what? Newsflash, Mother Nature does not care if you line these things or not. Ultimately, it fails, and these tailings escape. So they've got to be dealt with. That's why the Ontario government is turning around and saying, hang on a minute, let's try and get these things reprocessed. Let's try and clean them up as best as we can. I read a report, I think it's from Yale 360. The government got $10 billion worth of liabilities on documented sites. And I can tell you something now. I've been around our tailing sites, and there's a lot of tailings which the government haven't documented. The size of the problem is absolutely huge, but it's not just a problem, it's an opportunity. There's a hell of a lot of mineral wealth held in these tailings, which 20, 30 years ago, nobody would care for it because of the price, the commodity prices. But obviously we're in a different price era now. Also, as a society, in a different place in wanting to clean these places up. So, so that's we're climbing that mountain, and we're exceptionally happy with the results that we got so far.
Okay, just on any kind of operational matters, Ryan, just quickly, maybe it's too early to think about it, but if things do go well with the extract testing here, you probably want to act fairly quickly to start deploying it on the ground. I know Mitchell Smith was appointed recently to the board there, so he's your sort of man on the ground. But are you sort of thinking, is this the start of perhaps building out an operational team as well?
Absolutely. I'm obviously based in the UK. Fulcrum is a UK-based, UK-listed or quoted company. Our focus is in Canada, and if we, as I said earlier, we're looking at this master licensing agreement with the technology in Timmins and Kirkland Lake areas. That's going to give us an absolute focus, so that as this concept is delivered, that we have that commercial edge to us to lead the deployment of this technology across multiple sites. So we can look at several opportunities, whether that's we operate them or whether we collaborate in some other form or fashion. That's what we'll do. But ultimately, the technology works. The concept's being built out. We'll have that built out before the end of the year to get that final construction investment phase. And there's a huge opportunity there, and we Mitch is now the chairman. He gives us that in Canada focus, that focal point for us. So now we can focus on both sides, of the pond, as it were, from a corporate and an operational view. Yes.
Okay, good. So Peter, I'll give you the final thoughts. I know you like to keep things pretty simple. So what are you utilizing technology, or are you just good old-fashioned excavating, blasting, processing?
Yeah, we're lucky. We have John as our CEO, and he's a process guy. Our ball mill uses 0 chemicals, unless you consider H2O a chemical. That's all we use to extract the silver and produce the con. So our problems are different from other companies' problems. We don't have cyanide, heap leaching, I don't have remediation and angry community members. It's water. So that gives us an advantage. The other thing is, I'm a director of the Critical Minerals Institute, and one of our constant complaints is that Canada lacks enough mining schools, and we lack enough metallurgists, because any one of us on this call could walk out in your backyard and find a rare earth deposit. But can you process it? Does the technology exist to get it out of the ground and on an economic basis, get it into a format that somebody wants to buy it? To do that, we need more people out of school. We need more metallurgists. We need more mining engineers and geologists. That's not technology. That's basic human power. That's my last rant of the day for now.
Okay. You're advocating, though, for young people maybe watching this to perhaps consider a career in geology or metallurgy.
Well, somehow mining became unsexy.
Yeah, very.
Right? Mining is for old fat white guys sitting in a boardroom with a misbuttoned shirt and shoes that aren't shined. Like mining is fun. Mining is interesting. Mining is the intersection of so many parts of science. We got to make it sexy again.
I agree. And I believe BHP Billiton are trying to do that with one of their, I forget what the BHP Explore program. The lady heading up that says she wants to make mining sexy again. She told me that. And I agree.
There's going to be a lady at the mining show selling a book called Penelope in Mining, or Penelope for Mining. And it's a book about a young girl discovering the world of mining and loving it.
Excellent.
Sounds like a great read.
It does sound like a great, but you're right, though. You're absolutely right, and I think we've got a good group of people here. I know, Peter, you're aligned with that. Nick, I know in another company you're involved in, of course, Helium. You sort of joke that you go out and in your kind of summer hat and play the British man talking to these real American guys who are interested in the helium. And Ryan, of course, you were regularly going out, literally gold hunting in a pickup with Mitch and the other team members there. So that's what we need. Make it exciting, making it a story to follow. Thank you all, gentlemen, for tonight. So Ryan Mee from Fulcrum Metals, Peter Clousey from Silver Bullet Mines, and of course Nick DeLuc from ECR Minerals. And thank you to everyone who's watching. I'm sure we're speaking to all of these guys in the near future, but for now, good night.
Thanks all.
Thanks,
Thank you
everybody.
very much. Thank you.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.